And at the same time, we're seeing what you would have predicted, and you have been predicting for some time, and that is that gold and silver, as well as other commodities, are going to tell the truth about the destruction of the purchasing power of the currency and the risk, that posture that anyone who's a holder of long-term bonds is going to be feeling, because as the rates spike uncontrollably on long-term bonds due to the risk appetite that you're talking about, that's going to drive down the value of bond portfolios held by banks, by retirement funds, by pensions, by all kinds of things. So you're seeing a breakout in the precious metals, and that's your wheelhouse. Can you tell us what you're seeing there and what you've seen before in conditions like these?
Well, I mean, look, right now, gold is at an all-time high of 24% of global reserves as of Q1 this year. It's the highest in 30 years anyway. And whereas the U.S. dollar share fell to 42%. That's the lowest since, I don't know, at least 1990. And so, we've seen so far in September, the September deliveries, 267,200 ounces or 8.3 tons have been delivered into COMEX. Over 42 million ounces of silver, 1.3 tons, which is a massive amount in a non-delivery month. One of the things that I find to be particularly disgusting, Ed Steer talks a lot about it, is the short position on SLV at a 14-year high of 54 million ounces short. And it's funny because BlackRock previously warned of shortages in that there could come a time when there's not enough silver to cover these short positions. They warned about it, and they talked about it in the ETFs. We also see right now a exchange for physical on silver spread of $1.14. This is extraordinarily high. Normally, it's just a matter of 15, 20 cents or less. At $1.14, this signals either physical shortages or financial stress in the markets in London, where they can exchange for physical a COMEX contract into London. At $1.14, that's way, way, way up from what it should be, and this is not a good thing. At the same time, we see silver really and gold breaking out of a multi-month consolidation where it's been trading at a sideways pattern and shot up recently, of course, over the weekend or into the weekend at futures at $42 right now. In fact, let me just take a look and see what the futures are. Right now, the silver futures are 41.59, so come back a little bit, still up 87 cents. And so, we're beginning to see accumulation by the big money quietly start to translate into higher prices at a time when the public is still completely and totally asleep at the switch. Same thing we're seeing in platinum. That's kind of been quiet, but it's interesting because platinum and silver, which have both done very well, have now been reclassified as critical minerals by the government. And so it's almost like it's the Treasury preparing to stockpile again. We've talked a lot about platinum or silver and the shortage, but the Japanese guy who's the head of the TOCOM exchange has come out and said there's no platinum available in London or Switzerland, yet they're trading 3 million ounces of spot contracts deliverable per day. Well, that's also been classified as critical. So I would expect hoarding of both platinum and silver. I think what the U.S. is realizing that these are national priorities. We've talked about that. Someone got into his ear and said, this is what the BRICS are doing. We better do the same thing. And then you look at the way that some countries are reacting right now. As right at the same time U.S. declares silver as a national priority, you have Saudi Arabia buy a bunch in SLV. You see India's demand of silver is up 431% year over year in May, and record ETF inflows in June despite higher prices. So yeah, I mean, there's a lot of demand for physical metal that hasn't translated into the retail side of it yet. But The rest of the world, the big money, whether it be on the exchanges or the central banks or the sovereign wealth funds, are making it very clear that silver and gold are quite significant, and platinum, to their plans moving forward.
Make a point to remind everyone here who may not have been catching our previous episodes that you've been pointing out to us for at least 2 years that silver is a strategic metal. It's a defense critical material, and it's been absolutely silent on that front, other than the Silver Institute saying, hey guys, you're in a structural deficit. Hey guys, you're in a structural deficit year after year. Do you want to circle back on that? Because now it's being admitted. It's been officially added to the very top of the critical materials list that the U.S. has to prioritize.
Yeah, I think they didn't. When you see 8 Western banks, and I'll talk about Ed Steer's chart again that you showed several months ago, when you see 8 Western banks that maintain the largest concentrated position of any commodity ever traded on COMEX, it's not to hold down the price. Well, it is, but it's not price that's bothering them, because silver is inelastic. You don't need a lot to make a very expensive item. Even if it's 500 ounces in a Tomahawk cruise missile that costs millions and millions of dollars, or a fifth of or a sixth or an eighth of an ounce in an iPhone, the cost of the finished product is so much higher than the little incremental price of silver. It doesn't matter. More along the lines of they've tried to step on it because rising price would attract demand, and there's not enough availability of it. The price has been skewed by the trading on COMEX and the LBMA. It's real value skewed, and so I think the rising price would attract investors, speculators. They don't want that. It's more along the lines of being able to access stockpiles of silver rather than the cost of the silver. I know that sounds kind of strange, but if you're making it for all of these critical components, it's less about the price and more about the availability, because it's used in such small amounts in whatever the finished product is. But you're right. It has been suppressed. It has been held down. It has been manipulated. And I think now there's a race to accumulate it, because indeed it is strategic. It is critical. It is needed not just in electronics and electrical components, just about anything that conducts electricity. It is needed in military components. It is needed in medical devices. It is needed in so many places, solar panels, etc. And that plurality of demand, from monetary demand to military demand to industrial demand, makes it strategic, every bit as strategic as any of these other strategic metals. And I think that's the change, is that Trump understands that, his administration understands it. So, this is something I think that will continue, and there will be, at some point, I see a battle between the industrials and the, or shall I say, the manufacturers, the producers who need it, and the investors. So you're going to get companies like Tesla and Panasonic and Sony and whatnot in a battle for what's available. As the hedge funds and the investors start to take the other side, they're going to battle, and it's about availability of a depleting asset. It's not as much about the price, but just about the availability. And you start to wake everyone up just like that. It disappears. And what is a shortage on COMEX spills into a shortage globally across the board into retail as well. Not there yet. There's still great values, but I see that happening as where this ultimately goes to.
Yep, that whole topic of pension risk transfer from private pension plans and companies that maintain them into large hands of insurance companies that are saying, don't worry, we'll backstop you because we've got deep pockets and we've got these portfolios of whatever. Those portfolios, as you've described, and Alistair McLeod has
loaded with treasuries
and big packaged mortgage bundles, whether it's commercial mortgages or whether it's residential mortgages, all of which are looking horribly toxic going forward. So concerning times at that level of the financial management cake. You watch several other factors that are going on in the news. Is there anything major that's on your radar this week that we haven't talked about that we should wanted to add for the weekly market update?
A lot of gold and silver coming into the market, into COMEX. So far for September, 267 1,000 ounces delivered, 42 million ounces of silver delivered, which is huge. We talked about the shorts are up big time in SLV, which is huge. We talked about the BRICS meeting, the Shanghai Cooperation meeting. I think what I take away from that is that Trump overplayed his card with India, threatening 50% tariffs. When you look at the actual numbers, even though we are their largest trading partner, arguably, it only accounts for under 3% of their GDP, their trade with us. You look at a country like Mexico or Canada, where it's the majority, that's different. We'll have greater weight. The purchase of Russian oil for India is far, far more important to them. And this is why you see Xi and Modi and Putin shake hands and smile and hug at the Shanghai Cooperation meeting. The SCO is no small organization. I've talked a lot about it on your show. It's over 40% of global population, 35% of global GDP. 24% of the land area. And so when you talk about takeaways, I think the fact that Modi stresses strategic autonomy, will not trade long-term interests for short-term appeasement. And, they're making stronger ties with Russia, with energy and defense and security. One of the things that I found interesting was that China is now embarking upon mandatory AI education from primary school, building all the way up through high school to build a AI talent pipeline. And so I found that to be very interesting. I also found it interesting that of all of the Gen Zs polled, that the number one job that came out on top wanting to be was a social influencer. And yet you have all of these kids in China that are becoming engineers and astronauts and becoming proficient in AI from elementary school on. These are the things we're getting left behind, whether it be in the way that our kids are being raised with education, or what's happening in our U.S. foreign policy missteps under the Trump administration. As much as I would vote for him again, I think he really overplayed his hand with a country like India. And, I think that these are the kind of mistakes that are going to have ramifications with the continuing emergence and strengthening of not only the Shanghai Cooperation Organization, but the BRICS. We have not heard the end of that yet, but I found it interesting that more or less Modi came out and said, we're not going to back down from our relationship with Russia and or our oil purchases from them. It's more important than just about anything right now. So how this all plays out, I guess we'll see. But putting 50% tariffs on India was, I think, a big misstep. And that's what I took out of the Shanghai Cooperation Organization meeting. Other than that, like I said, likely to see payrolls be revised. I've read from anywhere from 500 to 800,000, which they will use to justify rate cuts. But when you have U.S. stock valuations now at the most expensive in history, surpassing the dot-com and pre-Great Depression levels, you got some serious risks ahead if indeed they do this, as the public is all in on equities, all in on margin, all in highest ever, and all in on options exposure highest ever. That's a dangerous market as the insiders are moving this way, the other way. I guess I would just simply say that everyone's been waiting for this moonshot, right? But it is moonshotting just at its own pace. It keeps going higher. It goes up, it consolidates, it goes up, it consolidates, and that's the type of movement that is hard for people. The waiting is the hardest part. The little by little, then all at once. That all at once moment people are waiting for, but maybe it's little by little for a lot longer than people think until there's that all at once moment. But that all at once moment, you better be well positioned before it happens. We continue to see things moving in the direction that we've talked about, maybe just not at the speed or in the manner that we thought. But here we are, looking at $3,500 an ounce gold. Let me just look real quick here, and then I'll let you go. We got gold right now at $35.39. I mean, come on. And we have up $85. And we have silver at $41 right now, up $1.15. So, really? Are we not moving in the direction that we think? I hope people understand this is a train that's just getting going, because the public, any of you who own gold and silver, try talking to one of your friends for more than 5 minutes about any of this stuff and watch what happens. And yet, here we are, silver at $41 an ounce, and you won't see a word about it on the evening news tonight. Or gold at $3,539. Don't tell. You won't see it on the evening news. But it's outperforming everything. It's the tortoise. It's not the exciting hare. It's the tortoise, and it will continue to do this. So this is just the beginning. If I were going to make a guess, I wouldn't be surprised to see $4,000 gold by the end of the year. I wouldn't be surprised to see silver knocking on 50's door or more by the end of the year. Now, I normally don't say that, and I don't like saying those things, but if I were going to take a guess, those numbers are wickedly in play. Very much so. I think maybe those are even undershooting where the potential could be, but that's not why we own it. But I think we're only 400, we're 15, not even 12, 13% away from $4,000. I think by the end of the year, that's highly probable.
You know what stuck with me from Andy's talk? When he said the big money is buying quietly while the public is asleep. That line keeps ringing in my head because he's right. Look around. How many people do you know who actually own gold or silver? Almost nobody. They might trade a stock, buy some crypto, or gamble on options, but metals? Forget it. And yet, central banks, sovereign wealth funds, even the Saudis and the Indians, they're piling in. That disconnect is crazy, and it's the opportunity. And here's the part that feels new this time. It's not just about supply and demand anymore. It's about politics and credibility. Goldman Sachs, of all people, came out this week and said gold could run to $5,000. Not because of mining shortages, not because ETFs are spiking, but because they think Trump is threatening the Fed's independence. Imagine that. One of the most powerful banks on Wall Street is basically warning, if the Fed loses credibility, the dollar is toast and gold's your only hedge. That's not tinfoil hat talk anymore. That's mainstream. Andy said manipulation always ends badly, and he's right. But now it's more than just COMEX shorts or banks leaning on futures. It's political manipulation, pressuring Powell, jawboning the markets, floating tariffs one day and walking them back the next. Remember the gold tariff rumor? When people thought Swiss gold was going to get hit with a 39% levy, futures spreads blew out. It was chaos. Then Trump had to jump on Truth Social to calm everyone down. Don't worry, gold isn't tariffed. But you don't forget something like that. If you're in London or Singapore, you're already thinking maybe the US isn't the most stable market to park bullion anymore. And while we're here still debating whether gold is too high to buy, the rest of the world is making moves. India's silver imports, up 400% year over year. Saudi funds, quietly buying gold ETFs. China and Russia, strengthening BRICS ties and hoarding metal. Even Andy pointed out how COMEX deliveries are huge this month. Tons of gold and silver moving off paper into physical hands. That's not retail investors. That's whales, central banks, and institutions positioning for something big. Meanwhile, average Americans? They'll tell you they don't want to touch gold because it's at all-time highs. Funny, right? The same people who have no problem buying the S&P at all-time highs, even though it's propped up by 7 tech stocks and insiders like Bezos and Zuckerberg are dumping billions. That's what Andy meant about price being the ultimate tool of misdirection. People see $3,500 gold and think expensive, but they don't see $3,500 gold as cheap insurance against a broken system. What scares me most is not even the retail investors being asleep. It's the pensions. Think about it. Millions of people's retirements are locked into funds that can't buy metals. They're forced into stocks at 1929-style valuations because bonds don't yield enough. And insiders are quietly heading for the exits. That's a setup for disaster. Andy said one day pensions will be the story, and I think he's dead right. When that house of cards shakes, there'll be no ignoring gold and silver. Silver especially is finally getting its due. Andy kept hammering how it's strategic, and now Washington actually admits it. They've reclassified silver as a critical mineral. That changes everything. Because now it's not just investors looking at it, it's national security planners. You literally can't make solar panels, EVS, iPhones, or Tomahawk missiles without silver. And there's no substitute. If supply gets tight, it's not just stackers and hedge funds competing. It's Tesla, Apple, the Pentagon. Andy said it's about availability more than price, and he nailed it. The battle's coming, and price will just be the scoreboard. Inflation data backs all this up too. The July CPI number looked tame, but the PPI, the producer prices, came in 5 times hotter than expected. That means costs are embedded in the system. Even if headline inflation looks stable, the pressure is still building underneath. And if the Fed cuts rates into that, which Trump is clearly pushing them to do, it's like throwing gasoline on a fire. That's why the bond market is rebelling. Andy said the bond market is more powerful than central planners, and you can see it. Long-term yields keep rising no matter what Powell says. Here's the irony Andy hinted at. Higher rates would actually fix things. They'd pop bubbles, reset valuations, bring real price discovery. But politically, higher rates are poison. No president wants that. So the pressure will always be to cut, to paper things over, and that's why metals are grinding higher, bit by bit. And I've got to say, Andy's tortoise and hare analogy really fits here. Everyone wants the moonshot. The day silver rockets $10 or gold pops $500 overnight. But it's happening already, just slower. It climbs, it consolidates, it climbs again. It's boring until suddenly it isn't. That all-at-once moment Andy talked about? That only comes when confidence breaks. And confidence doesn't crack gradually, it shatters. By the time CNBC is talking about it, it's already too late. Look outside the US for a second. China just made AI education mandatory in schools, from elementary through high school. They're literally raising a generation of engineers, coders, and scientists. Meanwhile, surveys here say the #1 job American Gen Z kids want is social media influencer. That contrast says it all. They're preparing for industries that consume metals, AI, green energy, space tech, and they're stockpiling the raw materials now. We're busy arguing about TikTok bans, so where does that leave us? Honestly, at a crossroads. We can keep pretending stocks only go up, debt doesn't matter, and the Fed can print us out of every hole. Or we can face reality, the dollar's dominance isn't guaranteed, the Fed's credibility is wobbling, and gold and silver aren't relics, they're lifeboats. That's why central banks are loading up. That's why sovereign funds are loading up. And that's why individuals who see the writing on the wall are quietly buying before the herd arrives. Andy said $4,000 gold and $50 silver are in play by year-end. Honestly, after Goldman's $5,000 call, I think even that might be conservative. Because this isn't just about markets anymore. It's about politics, confidence, and whether America can still be trusted to manage its currency. And the sad truth is, more and more people, at home and abroad, aren't so sure. That's why I tell you this like a friend. Don't wait for validation. Don't wait for the evening news or your financial advisor. By the time they admit what's happening, the opportunity will be gone. Right now, premiums are low, supplies available, and hardly anyone's paying attention. That's the moment you want to position. Not when silver's already at $60 or gold's at $5,000 and the headlines are screaming. By then, the train's gone. This is one of those rare moments where perception and reality are totally disconnected. And if you can see the gap and act on it, you're ahead of 95% of people. That's how you protect yourself. That's how you come out stronger on the other side.